Hello, good people. My name is Gachira, and I'm a partner at One Accounting, which is an accounting and business advisory firm, and also at Wamira and Associates. And so we'll pick it up with tax videos that we've been doing in this series. And today we want to talk about value-added tax, which is VAT. So what is VAT really? You know, you've heard about VAT, maybe you've seen a receipt from the supermarket with VAT, and sometimes you're wondering, what is this VAT? So I'm sure most of us have interacted with this VAT either once or more, right? And so we want to just delve right into it today and just try to break it down so that we can all understand what VAT is all about. So VAT is something we call an indirect tax or an agency tax. So by agency tax, we mean that you know, when you think about taxes, they are direct taxes. So direct taxes are taxes which are payable directly from taxable income, you know. So when you talk about something like income tax, that's a direct tax. But then when you think about VAT, then that's an indirect tax or an agency tax. So it means this tax does not belong to you. You're actually collecting it on behalf of the government as an agent. So that is important to note. You're an agent and you're collecting it on behalf. So what you do, for instance, if you're selling a product, so there is that price of the product, for instance, which is 100 bob. So you will charge the 16% to the customer, take it and then remit it to the government as an agent. So that is what is meant when you talk about agency taxes. So the main laws really that govern VAT in Kenya are the VAT Act of 2013, the Tax Procedures Act of 2015, and also the Finance Act. So if you read some of these and they are easily available on the internet, you'll be able to learn a lot more about VAT and some of the main laws that govern that. So let's look at VAT. Who can charge VAT? So it is important to note that VAT is only charged by registered taxpayers. So that's very important to note. So if you're not registered for, as a taxpayer, first of all, then you cannot charge VAT. Then it is also important to note that if you've not registered for a VAT obligation, then you need also not charge for VAT, all right? So I think that's important to note. And this applies for all taxable goods and services, all right? And so VAT should be paid by the 20th of the following month. So that's the law again. So if you charge VAT, for instance, if you're in the month of August and you charge VAT, during the month of August, you should remit that VAT by the 20th of the following month, which is now September. So that's important to note. And if you're registered for a VAT obligation, regardless or irregardless of whether or not you make business, then you still need to file for VAT. So in cases or in months where you've not made business, then you file for something called a nil return, which is a direct thing we can look at another video. So what is the threshold of registering for VAT? So the threshold for registering for VAT in Kenya is actually at an annual turnover of 5 million. So if you've not gotten to an annual turnover of 5 million, please don't go registering for VAT. Now, some of you may ask, maybe some of my customers are saying, no, I'll only deal with you when you have VAT, but yet you've not hit that turnover of 5 million a year, not a month. What do you do? So what you need to do is, in such cases again, KRA does not disallow you from registration, so you can still register as much as you've not hit that threshold, but just be sure that you're filing for the VAT every month. So that's important to note as well. So I think right now we want to define a few terminologies that come alongside VAT. So what's a tax point? So a tax point is a date of issuing the invoice or the date of delivery of the goods and services. So this is the date KRA will use. So the date on your invoice, for instance, if I dealt with you today and I invoiced you and I dated it today, for instance, let's say 15th of August 2021, that will be considered to be the tax point by KRA, all right? And so what this means is that we will be expected to pay for this VAT by 20th of next month. So another question I regularly get is, okay, so if I invoice but these guys take maybe 6 months to pay me, what happens? Unfortunately, the law does not cover us from that. We still have to pay that VAT as we follow up on our customers to pay us. So it's important to be very cognizant of what the tax point is. And this, remember, is the date on the invoice or the date when the goods and services are delivered. So what are some of the tax rates? Or even before you go to the tax rates, I think it's important to define something called input and output VAT. So output VAT is VAT charged on sales, all right? So again, if you're dealing with goods and you sell them, for instance, again, let me use the example of 100K. When you sell those goods, the VAT you charge on those sales is 16%. The 16K you charge is called output tax, right? So you've noticed that for you to make any sale, for instance, if a good example would be to make bread, maybe I bought flour. So if there was any input that was used in the making of the product that realized the VAT, you realize that that receipt also has VAT. So if you bought that flour and it had some VAT, that is, that is called input VAT, right? So let's differentiate between input and output VAT. So output VAT is VAT on sales, and input VAT is VAT on inputs or purchases, right? And so how we calculate VAT is we take the output tax, then we deduct the input tax. So for instance, if I sold you goods worth 100,000 and I charged VAT of 16,000, which is at a rate of 16%, and you're gonna be looking at the rates shortly, but then I incurred a purchase to make those goods of 50K. So there was an input tax of 8K. So when I'm filing by the 20th of the following month, I will take this input tax, which is a 16K, then I will deduct the 8K, which is the input tax, and then I'll pay the difference of 8K. So remember, the tax payable is output VAT on sales minus input VAT on purchases, then you pay the difference to KRA. And there's a whole math around doing that as well, and you can get in touch if you need us to help you doing that. So some of you may ask, what if I have a credit? So a credit is to mean your purchases or your input tax was more than your output tax or your sales. Then KRA allows you to carry forward this to the next month, all right? And so you can offset other outputs against that. So for instance, if my inputs were 10,000 and my outputs were 6,000, I have a 4K that I can carry forward to the next month. So that is important to note as well. And by the way, as we do this, anytime, it's good to know that anytime you've registered for VAT, please make sure you also get an ETR machine, because every invoice must be accompanied, every VAT invoice must be accompanied by an ETR invoice. So that's important to note. Another thing maybe that is important to note is the different rates of VAT in Kenya. So there's a 0% rate, which is well stipulated in the second schedule. And so this applies mostly to public bodies, to goods supplied to EPZ, etc. Then we have 8%, which was introduced not very long ago. So this applies to petroleum products or oil. And then there's a normal or general rate of 16%. So anytime you're dealing, you will notice that the goods or services you're dealing with are falling into one of these categories of VAT. And so it is important to note those as well, because they're treated differently when filing. So there's something else maybe that is important to note, and this is reverse tax. So this is tax on services that have been imported into Kenya, and it is payable by the person receiving this taxable service, all right? So that is important to note as well. If you're engaged in that kind of reverse VAT, then the person receiving that taxable service will be the one to pay for that VAT. So that's an important one to note as well. What is withholding VAT? So in the same way there is withholding tax, the KRA has also introduced withholding VAT, and I think the current rate is around 2%. And so it is deducted at source, and again, this is recorded as a credit, all right? So if I invoiced you and I included VAT in that invoice, when you're paying me, you can withhold part of that VAT. So instead of paying the entire 16%, you withhold and remit a percentage of that to KRA. Then when I pay the entire amount, because I'll still be expected to pay the entire 16%, I can claim back the difference as a credit from KRA. So that's important to note. And the last thing maybe I want to talk about is VAT returns. So this may appear from different sources. So maybe excess credits from withholding VAT. And this should be processed within 90 days. Maybe you're talking about bad debts, you're talking about excess credits from zero-rated supplies. So this may warrant VAT refunds, and KRA is happy to refund you any VAT if you have proof of any of these reasons. So that has been Tax Minute with One Accounting. We were looking at VAT. See you in the next video as we look at another tax. Asante sana.